Electric vehicles are the future of transportation, and with the market growing at a breakneck pace, there's never been a better time to invest in EV penny stocks. But with so many options out there, separating the winners from the losers is essential. So, if you're tired of hearing about Mullen Automotive and want to know which EV penny stocks are worth your time and money, buckle up, because we're about to take you on a ride. Are you considering investing in Mullen Automotive? You should reconsider. While this EV company has been making headlines, it's not necessarily a wise investment. Instead, let's look at 3 other EV penny stocks that could be better bought. First up is ARVL, a promising startup that recently took steps to stay on the Nasdaq. Then there's Tritium DCFC, an EV charging company that's expanding into new and lucrative markets. And finally, we have Canoo, an electric van maker that's scaling operations and raising the necessary funds. Mullen Automotive, on the other hand, has repeatedly proven to be a loser. Its stock has been steadily trending downwards for months, and even positive updates can't keep it in the green for long. In fact, Mullen recently reached a 52-week low, and while it saw a brief uptick after securing new funding, it's already lost momentum. Investors looking for EV stocks at low price points should avoid Mullen. While competition in the EV market continues to rise, other companies are more deserving of investor attention. Not every EV penny stock is a buy, and companies like Nikola and Mullen belong in the same category as they continue to trend downward. But there are micro-cap companies making impressive headways in the space and shaping the next leg of the EV race. So let's take a closer look at some of the best EV penny stocks to buy for investors seeking opportunities outside of Mullen. One of these companies is ARVL, whose stock is currently priced at $3.30 per share as of April 20, 2023. This promising startup recently took steps to stay on the Nasdaq and could be a wise investment choice. Another option is Tritium DCFC, whose stock is priced at $1.09 per share as of April 20, 2023. This EV charging company is expanding into new and lucrative markets, making it an attractive investment option. Finally, we have Canoo, whose stock is at 76 cents per share on April 20, 2023. This electric van maker is scaling operations and raising the cash it needs to compete in the crowded EV market. Thanks for tuning in. Let's get back to the video. Now, let's take a closer look at one of the best EV penny stocks to buy, ARVL. This British EV startup has recently made headlines due to significant market shifts. However, despite facing some turbulent market conditions, ARVL recently reported some exciting news that may help turn things around. Shareholders recently voted to confirm ARVL's merger with a Special Purpose Acquisition Company, or SPAC, Kensington Capital Acquisition fee, resulting in a 40% surge in ARVL stock. And while the stock has come down since then, ARVL is still working hard to reverse course and give investors renewed cause for optimism in 2023. In fact, today, ARVL confirmed its plans for a 1-for-50 stock reverse split, which could help it continue trading on the Nasdaq and potentially recover some of the ground it has lost in recent months. With high short interest and the possibility of being in the spotlight on Wall Street bets, ARVL is definitely a penny stock worth keeping an eye on. Moving on to another EV penny stock, Tritium DCFC is an Australian company producing DC fast charging technology, gaining attention from investors looking to invest in the booming EV charging sector. Although Tritium isn't well known in the US, it has caught the attention of Investor Place contributor Alex Royce, who named it undervalued among penny stocks to buy for 2023. In addition to releasing record earnings, Tritium recently signed a deal with BP, the most significant order in its history. It could help the company extend its reach into European and US markets and compete with larger EV charging peers. Another EV penny stock to watch is Canoo, which has faced challenges in the past year. However, the company has recently made some positive developments that have boosted investor sentiment. For instance, Canoo has secured a manufacturing facility in Oklahoma City, and the company plans to scale production and hire over 500 workers at this new hub. Additionally, the company has announced plans to sell more shares to raise capital for expansion, which has helped push GOEV stock upward. Despite some experts' doubts, Canoo landed big orders from Walmart and NASA in the past year and signed a distribution deal with a prominent Saudi Arabian company at the start of 2023. Canoo is on the growth path and taking the necessary steps to achieve it. When it comes to investing in EV penny stocks, it's essential to do your research and find the companies that can potentially be long-term winners. However, while Mullen Automotive may be grabbing headlines, it's important to remember that it has been struggling to stay afloat and has consistently trended downwards. That's why investors must consider other options that are more deserving of their attention. Out of the 4 EV penny stocks we've discussed, Canoo, Tritium, and ARVL stand out as solid alternatives to Mullen Automotive. Let's take a closer look at why these 3 are better buys. Canoo has made significant progress in the EV market with its innovative approach to electric vans. The company is scaling its operations and raising the funds it needs to succeed, making it an exciting prospect for investors looking for a long-term play. Tritium DCFC is an EV charging company that is expanding into lucrative new markets. With the increase in electric vehicle adoption, Tritium DCFC can potentially be a significant player in the charging infrastructure space. And finally, ARVL is a British EV startup that has been making headlines due to its recent merger and reverse stock split. While there have been some market fluctuations, ARVL's potential for growth and innovation makes it a penny stock worth watching. Compared to Mullen Automotive, these 3 companies have shown more promise in terms of long-term potential and profitability. While Mullen may have captured investors' attention with its headlines, it has yet to deliver positive results consistently. In contrast, Canoo, Tritium, and ARVL have shown signs of progress and growth, making them more attractive investment opportunities. Investing in penny stocks is always a risk, but for those willing to take on that risk, these 3 EV penny stocks offer exciting potential. With the growth of the EV market, companies like Canoo, Tritium DCFC, and ARVL have the potential to be significant players in the industry, delivering solid returns for their investors. So, if you're looking to invest in the EV penny stock space, consider these 3 alternatives to Mullen Automotive is worth considering. Are you ready to take advantage of the exciting opportunities the EV market offers? By avoiding Mullen Automotive and focusing on companies like ARVL, Tritium DCFC, and Canoo, investors can position themselves for potential growth in this rapidly expanding industry. So, what are you waiting for? Start researching these companies today and see if they fit your portfolio well. And if you found this information helpful, be sure to like this video and subscribe to our channel for more valuable investment insights. Thanks for watching. This is Fred. See you in the next one. If you haven't seen the latest update on Mullen Automotive, check it out in this video.